Ahead of Disney's earnings report tomorrow, the board is expanding its search for Bob Iger's successor to include external candidates as well. Joining us right now to talk about what to expect is Tom Rogers. He's Oorbit Gaming Executive Chairman, also former NBC Cable President and CNBC contributor. And Tom, it's great to see you this morning.
Great to be here, Becky.
So the big deal of earnings this week is the Disney report that comes tomorrow at 8:30 a.m. And I know we're going to be watching pretty closely on a lot of fronts. We want to know how things are going at the streaming service with Disney Plus. We want to know how the theme parks are going. What do you think we should be on the lookout in particular?
Well, just to set the table a little bit, Disney is #1 in terms of viewership overall when you aggregate its streaming and its traditional TV services. So in a position to show some leadership here in terms of engagement. Having said that, it's hard to talk about Disney without talking about Netflix. And Netflix enterprise value now is actually bigger than Disney, Warner, Paramount, and Fox combined, just to show what the traditional TV world is up against in terms of Netflix growth. Netflix free cash flow is presumably going to surpass Disney's next year. But the thing that I'm impressed with Disney is they've gotten their streaming revenues up to about 2/3 of Netflix. And last quarter, their streaming revenue was about equivalent to what their traditional linear television revenues are. No one else among the traditional media companies have done that. So they're getting some revenue scale. The big question that everybody's going to be focused on is, yes, they've established their streaming. Yes, it's scaling. But the big question is, can it be as profitable as their traditional television business was? That's a question of margins. And the margins on the streaming business have a long way to go. And with all the sports rights that they've acquired, as you begin to have to allocate a lot of that sports rights to streaming. We can talk about ESPN launching and streaming in a second. That allocation of sports rights is going to change that profitability picture, I think, potentially quite substantially.
You know, Tom, the sports rights have been so important for getting eyeballs to go anywhere on the streaming services. You know, it's something Amazon wants access to. Apple wants some access to some sort of sports rights. You see it with Peacock. It drives the numbers when they're able to put on the football games on Peacock on some of these things. But the big advantage that the old line media companies have had to this point is that they have not only the ability to stream, but also to put it on the traditional broadcast networks, on the cable systems, if they choose to do that, too, to make sure that anybody and everybody can get access to these things. And that's been important to the sports leagues to this point. We see more and more people going to streaming. Is there a point where one of the Amazon or Netflix or somebody has to get involved with a broadcast partner, or do you think that this gradually is a situation where broadcast becomes less and less and less important?
Well, I think you raise a great point. Broadcasting still remains critical to the broad distribution of sports, and NFL in particular is really the key element of what's still left in terms of viewer aggregation on traditional TV. But the streaming world now is such that, take the NFL, about half of all NFL games are outside the cable bundle now in terms of being accessible. And the big strategic issue as we approach next year is going to be the launch of ESPN Flagship, the so-called digital streaming version of ESPN. And that is a real jump ball in terms of its consequences for Disney and for the whole industry. Is it really going to accelerate cord cutting? Is ESPN available in streaming form going to just have a massive impact in terms of additional cord cutting, which doesn't seem to have a floor anymore? Many thought that 50 million subscribers might be the floor. With ESPN going out of the bundle, there's a view now that there may be no floor. for. And the question is, what will the price be? And if the price is too high to recoup all the sports rights that they've done, is that going to have a real impact on the ability of streaming to scale? So they have this balancing act of having to create a strong, profitable sports streaming service, but at the same time protect the linear cash flows that are still very significant coming out of the cable bundle. And that's probably the biggest thing to watch in Disney going into next year.
So the linear, that's the analogy to the linear cable, the analogy to the ice cube that you're using. And you said it looks like there's no floor at 50. Have you ever seen an ice cube just suddenly get to a point and stop melting? It's just, oh, look, it's, no, that doesn't happen, does it?
If you stop time and put it back in the freezer, but I don't think there's any stopping time in this case. It's getting too extensive. In fact, you can get about 40% of NFL games by taking Peacock, Paramount, and Amazon for, I think, about $25 a month relative to what the cable bundle cost. And antennas, over-the-air antennas to pick up the broadcast versions of the NFL are becoming increasingly popular, and so there really are far more economic ways to get NFL games going forward.
Tom, is the market overvaluing the Netflix of the world or undervaluing the, if you want to look at Disney Plus or Peacocks, the old lines, or you think neither?
I think the market has it about right. It takes true global scale to create the kind of margins with the revenue that global scale can create, that Netflix is way ahead of everybody else, has a premium valuation, which has soared recently, and all the traditional media companies are selling at a real discount. And until they can show that their streaming entities are going to be at least, if not more valuable than their traditional television business was, there's reason that they sell at a discount. Now, Disney's better positioned to be the #2 media company in terms of global scale. But remember, Hulu and ESPN are basically domestic services, and Disney Plus lost last quarter international subs. That international sub number will be a big one to watch. And the projections for its international sub growth on Disney Plus are not that robust. So questions about the global scale and how that will go for Disney.